Imagine this. It's 2007 in San Francisco. Two broke roommates, Brian Chesky and Joe Gebbia, are staring at their rent bill, realizing they don't have enough money to pay it. They're both design graduates, creative but struggling, and they need cash fast. At the same time, there's a big design conference coming to the city, and every hotel room is sold out. That's when they get a crazy idea. Why not buy a few air mattresses, throw them in their apartment, and rent them out to attendees who couldn't find a hotel? They even threw in free breakfast. They called it Air Bed and Breakfast. That weekend, they hosted 3 guests, charged each of them $80 a night, and unknowingly planted the seed of what would one day disrupt the global hotel industry. That scrappy origin story is the heart of Airbnb, a company that started with nothing but desperation and hustle, yet would rise to challenge century-old empires like Marriott and Hilton. Now, to understand why Airbnb's story matters, you have to first understand the power of the legacy hotel model. Hotels, as we know them today, trace their dominance back to the post-World War II boom. As air travel expanded and tourism became accessible to the middle class, chains like Hilton, Marriott, and later Hyatt built global reputations on consistency and trust. If you checked into a Hilton in New York, you knew exactly what you'd get at a Hilton in Tokyo or Paris. That consistency became their brand. They sold predictability, loyalty, and reliability in a time when international travel felt uncertain. They pioneered loyalty programs, Hilton Honors, Marriott Bonvoy, designed to lock customers into their ecosystem. By the 1980s and 90s, these programs had become so valuable that Wall Street analysts didn't just view hotels as real estate operators, but as data-driven membership empires. Their model was simple: build massive properties, charge nightly rates, add in extra fees, and then reward repeat customers with points they could redeem for future stays. It was an ironclad system, and for decades, nobody dared to challenge it. But here's where the story turns. When Chesky and Gebbia launched Airbnb, they weren't just competing with hotels on price. They were offering something hotels couldn't: intimacy, personality, and variety. Instead of beige corporate rooms, you could sleep in a loft in Brooklyn, a cabin in the Rockies, or a flat in Paris's Marais district. Travelers weren't just booking beds, they were buying experiences. At first, the hotel industry laughed it off. Who would want to stay in a stranger's house? But Airbnb tapped into something hotels overlooked: a growing generation of travelers, especially millennials, who valued authenticity over uniformity. And slowly, the cracks in the hotel empire began to show. By 2010, Airbnb had thousands of listings worldwide, funded by early venture capital, and powered by a brand new wave of social trust. Think about it. In the 1980s, nobody would have handed their house keys to a stranger from another country. But by the 2010s, with Facebook, LinkedIn, and peer-to-peer platforms, digital trust was normalized. Reviews, ratings, and profiles gave travelers enough confidence to book a stranger's spare room. What started as a quirky idea became a cultural movement. Meanwhile, hotels kept relying on their loyalty programs, on expensive marketing campaigns, and on building more glass towers in more cities. They underestimated how fast Airbnb was growing. They thought it was a niche product, mostly for backpackers or budget travelers. But Airbnb wasn't just competing for budget tourists. It was slowly stealing the very market hotels depended on. Business travelers started booking Airbnbs for long-term stays. Families realized they could save money and get kitchens and extra bedrooms. And as Airbnb scaled, it discovered something game-changing. It didn't need to build anything. While hotels spent billions constructing new properties, Airbnb's supply grew with every new host who listed a spare room, apartment, or villa. It was infinitely scalable with minimal overhead. And then came the real disruption. The moment when Airbnb stopped being just a quirky alternative and became a legitimate competitor. The disruption phase began quietly, almost invisibly, like a storm forming on the horizon. Hotels didn't notice the shift at first, because their numbers still looked strong on paper. Occupancy rates remained steady, and loyalty programs were adding members. Hilton Honors crossed 100 million members by 2017. Marriott Bonvoy wasn't far behind. The financial press kept praising these hotel chains as unshakable pillars of the travel industry. But beneath that surface stability, Airbnb was eating away at their foundation. Every new listing on the platform represented supply that hotels didn't control. Every booking shifted demand away from the traditional model of check-in desks, bellhops, and standardized rooms. By 2015, Airbnb had grown into a global force with millions of listings in over 190 countries. And here's the kicker. Airbnb didn't own a single property. Compare that to Marriott, which had to spend billions acquiring Starwood hotels just to expand its footprint. Airbnb scaled faster, cheaper, and with more cultural relevance. For every family renting a cozy cottage in the English countryside, for every group of friends splitting an apartment in Barcelona, for every digital nomad booking a studio in Bali, hotels were losing market share. And it wasn't just about price. The real power was in the psychology of travelers. Once people tried Airbnb, once they realized the value of extra space, kitchens, and the ability to live like a local, their preferences changed permanently. This shift was measurable. Surveys showed that nearly 80% of travelers preferred hotels initially. But after staying in an Airbnb once, that number dropped to 40%. Hotels went from being the default choice to just another option. That's devastating for an industry that built its power on habit and loyalty. And the data backed it up. Every 10% increase in Airbnb listings in a market cut hotel revenues by 2 to 3%. That might sound small, but in an industry where margins are tight and debt loads are heavy, a 2 to 3% drop can determine whether a property thrives or shutters. So how did Airbnb pull this off? Part of the answer lies in the technology itself. Airbnb built a platform that was frictionless, visual, and aspirational. Scrolling through listings didn't feel like shopping for hotels. It felt like dreaming. Browsing tree houses in Costa Rica, castles in Ireland, or chic lofts in New York. Hotels, by contrast, offered sterile photos of identical rooms with copy-paste descriptions. Airbnb didn't just sell nights, it sold stories. And those stories spread like wildfire on social media. Instagram and Facebook became free marketing engines for Airbnb because every guest who stayed in a quirky property wanted to post about it. When someone shared a picture of themselves in a glass igloo under the northern lights or in a converted barn surrounded by vineyards, they weren't just sharing a vacation. They were advertising Airbnb to their friends. Hotels could never replicate that kind of organic virality. And then came the numbers that started scaring Wall Street. By 2024, Airbnb generated $11 billion in annual revenue, the same as Hilton. Think about that. Hilton, with its massive infrastructure, thousands of properties, and a century of brand recognition, was neck and neck with a company that started with 3 air mattresses less than 2 decades earlier. Investors began to realize that Airbnb wasn't a fad. It was a structural shift in how people traveled, and more importantly, in how real estate could be monetized. Here's where the real estate angle becomes fascinating. Traditionally, hotels locked up prime real estate. They bought or leased expensive properties in high-demand areas, built massive complexes, and then extracted value over decades. Their business model depended on ownership and scale. But Airbnb flipped that script. Suddenly, any piece of real estate, anywhere in the world, could become part of the travel economy. A spare bedroom, a vacation home, a granny flat, all of it could be monetized. And because Airbnb's commission structure was lower than Booking.com or Expedia, even hotels themselves began quietly listing rooms on the platform. By 2025, Airbnb had added over 100,000 hotel listings in a single quarter. The irony was almost poetic. Hotels, the very industry Airbnb was threatening, were now feeding the beast by signing up for the platform. This marked a pivotal moment. Airbnb was no longer just a peer-to-peer marketplace. It was becoming a hybrid travel ecosystem where hotels, boutique inns, and independent properties could coexist alongside personal hosts. And Brian Chesky, Airbnb's visionary CEO, made it clear, hotels are the future. What he meant was that Airbnb didn't need to destroy hotels. It could absorb them, integrate them, and make them part of its ecosystem. That's how disruption works at scale. First, you attack from the edges. Then, when the giant starts to falter, You invite it into your system and rewrite the rules of the game. For landlords and property owners, this was a wake-up call, because the opportunity wasn't just about travel. It was about control. In the old world, real estate investors who wanted exposure to hospitality had two choices: buy hotel stock or build a hotel. Both required massive capital. Airbnb created a third option: rent out existing properties and tap directly into global demand. By 2024, the average U.S. host earned $14,000 per year. Superhosts, those with excellent ratings and optimized listings, earned nearly $18,000 or more. For ordinary people, that was mortgage money, tuition money, or a path to financial independence. For professional operators, it was a scalable business model that could rival hotel chains. But let's zoom out to the bigger picture: culture. Airbnb's rise wasn't just about dollars and cents. It was about redefining what travel meant. In the hotel era, travel was about comfort and predictability. You went to Paris, you stayed in a Hilton, you saw the Eiffel Tower, and you flew home. Airbnb turned travel into immersion. You weren't just visiting Paris. You were living in a Parisian neighborhood, shopping at local bakeries, and waking up in a Haussmann-style apartment. It changed the very fabric of tourism, shifting demand away from tourist districts and into residential communities. That created new cultural tensions. Some cities accused Airbnb of fueling gentrification and driving up rents. Regulations were introduced in places like Barcelona, Amsterdam, and New York. But despite the pushback, the momentum was unstoppable. Travelers had tasted a new kind of experience, and they weren't going back. Meanwhile, hotels scrambled to respond. They tried building their own home-sharing platforms. Marriott experimented with homes and villas. Hyatt dabbled in partnerships. Accor acquired luxury rental companies. But none of these efforts matched Airbnb's scale or cultural cachet. Why? Because Airbnb wasn't just a product, it was a verb. Just like Google it became synonymous with searching the internet, Airbnb it became synonymous with booking unique travel accommodations. And once a brand becomes a verb, it's game over for competitors. By 2026, analysts predict Airbnb will increase its hotel listings by 20% more. At that point, the lines between hotels and short-term rentals will blur entirely. You'll open the Airbnb app, and you won't just see someone's spare room. You'll see boutique hotels, luxury resorts, eco-lodges, and traditional listings all in one place. Airbnb will have absorbed its competition by turning them into supply partners. And the real winners? The property owners who adapt early, who understand that flexibility, personalization, and platform economics are the new loyalty points of the travel industry. And here's the final twist. Airbnb isn't just targeting hotels. It's quietly reshaping real estate itself. Long-term stays, those lasting 28 days or more, now make up nearly 17% of bookings. That's not just vacation travel. That's housing. That's digital nomads, remote workers, and temporary relocations. When you think about it, Airbnb isn't competing with Marriott or Hilton anymore. It's competing with landlords, apartment complexes, even housing policy. It's redefining where and how people live, not just where they sleep on vacation. This is why Airbnb's rise isn't just a travel story. It's a real estate revolution. It started with Air mattresses in a San Francisco apartment and grew into an $11 billion a year behemoth that forced the most powerful hotel chains in the world to bend. It exposed the fragility of loyalty programs and revealed the hunger for authenticity in travel. And as it integrates hotels into its platform, Airbnb is positioning itself not as an alternative to hotels, but as the default platform for all travel accommodation. The future Marriott, the future Hilton, the future of hospitality itself. So what does this mean for you? If you're a property owner, it means opportunity. If you're an investor, it means rethinking your exposure to hospitality. And if you're a traveler, it means the golden age of choice, where every trip can be tailored, personalized, and affordable in ways the old system never allowed. Airbnb versus hotels isn't just a competition. It's a changing of the guard. And like every disruption before it, from Netflix versus Blockbuster to Amazon versus bookstores, the ending is already written. The future belongs to the platform.